Hi, everyone, and welcome to the AI Interconnect podcast, where we explore how the future is being built right now by entrepreneurs, innovators, and bold thinkers driving change across PropTech and beyond. I'm your host, Lauren, and in this episode, I'm joined by Michael Carpentier, CEO and co founder of Vesta Equity, a company that's radically reimagining how homeowners access and leverage their equity. Michael and his team are bringing tokenization into real estate world in a way that challenges the status quo. And we are talking about decentralized ownership, transparent investment model, and a new era of financial inclusion through blockchain. In our conversation, we will hear how Vesta is navigating industry challenges, what's broken in the traditional equity model, and what Michael see coming in 2025. And let's dive in. Michael, welcome to the show. I'm
Thank you.
really glad to have you here.
Very happy to be here and looking forward to the conversation, Laurent.
Fantastic. Um, that's let's kick things off with um, how thing has been doing for you and Vesta Equity lately.
Lately, great. It's been a challenge to get to where we are. We were early into the game when it came to the concept of leveraging blockchain technology vis-a-vis real estate and really generally real-world assets. The trend when we joined into the fray was really more focused on things like NFTs and art and the digitization of things of that nature, music and stuff like that. There was a lot of speculation in the market too, a lot of cryptocurrencies being launched. So a lot of people looking for quick returns and quick bucks. And, quite frankly, a lot of questionable type of business models. And at that point in time, I don't think people were really comfortable, particularly the financial services side, the more TradFi side of the equation, weren't really comfortable with blockchain. And it's because they simply didn't understand it. They didn't inform themselves. A lot of people
Oh,
equated blockchain technology with cryptocurrency. And,
yeah,
you know, not
yeah, it's a
necessarily
big
the,
mess.
yeah.
Yeah,
And I kept trying to explain to people that cryptocurrencies are a use case of blockchain. And
yeah,
blockchain has got many use cases, and cryptocurrency is simply one use case. So it was a struggle to get to where we are, but we've seen that transition take place. We've seen the financial services industry, the TradFi industry, are starting to realize this is a technology that needs to be deployed into financial services for the betterment of their own companies, but also for the
of
betterment
course.
of the types of services and solutions they can provide to their clients. So we're seeing that evolution and that change. And now with political environments in certain regions, we're starting to see a lowering of barriers, less fear, less threats of regulation. Gensler, the former SEC head of the SEC, unfortunately was very anti blockchain for whatever reasons. I'm not sure exactly why, but he was very against the whole concept of blockchain technology, in particular cryptocurrencies. But those things have changed, and the environment's getting more positive from that perspective. So what we're seeing now is a readiness to use and leverage this technology, and that's benefiting us as a company that wants to help people essentially access equity in their home debt free. Because if you look
Yeah,
at the market over time, you go back 100, years and even longer, the only way to access equity in your home was to sell the asset or go to a bank and incur more debt, which is an odd concept when you think of it. If I've paid off a mortgage my entire life, and now I want to access the equity in my home, I have to go back to the bank and ask them for another loan. But you own the asset. So our business model essentially enables a homeowner to access that equity debt free, and we leverage blockchain to do that.
that's
And
fantastic.
what we do is we eliminate the intermediary out of the equation, and we allow
Okay.
investors to invest directly into that asset.
What wonderful. I like to start a little bit backwards. I like let's rewind for a moment, and I like to have uh, your story. What's
Sure, yeah.
you have work across several area of business strategies and innovation.
Yeah.
What originally led you into PropTech space?
Well, to be honest with you, I should have become an architect when I was younger. I love real estate. In fact, when I was 16 years old, I tried to convince my dad to lend me money to buy some duplexes, some residential properties that produce income. And
Mm.
my dad was quite traditional and just patted me on the back and said, "Just go to university, get good grades, and get a good job." But I've always had this entrepreneurial spirit to me. I love the idea of taking an idea and putting it into fruition. And I, spent my entire life in various roles, mostly digitally focused, mostly on the innovation side. Like, as an example, I was at Getty Images at the time where the whole concept of photography, which was all analog based, was going digital. And being able to take those assets and sell those assets to advertising agencies, filmmakers, was a really a novel concept. So I was part of the team that actually took the whole footage concept and created digital libraries, sellable digital libraries to advertising agencies, film production studios, direct to clients, so they could use it in presentations and whatnot, or productions and TV commercials. And building that out was quite innovative and very, at that time, very unique, because bandwidth was an issue, and being able to show the video and then transmit the video was still relatively new. But it was an innovative idea to take an analog studio, edit it, digitize it, structure it so that it can be searchable. Was quite new and unique. So I've always been in that space where innovation has led to business opportunity. And what led
Mm.
me to PropTech was that inherent early life interest in real estate. Love it. I run around, walking around LA when I'm in LA, looking at mid-century homes and craftsman style houses. So I love that aspect of it. And I love technology. And when blockchain started coming into its own, I started really immersing myself and reading about it. And I wasn't so much interested in the cryptocurrency side. I was interested in the use cases, and I read quite a number of books, and started saying, where can this be used? How can it be applied into a use case other than than cryptocurrencies? And I started looking at real estate. And at that time, I'd come across a series of articles about reverse mortgages. And I don't think you've got reverse mortgages in Europe, but you have them in North America. And they're quite inequitable for an older homeowner. The homeowner ends up paying a lot of fees. They end up paying pretty high interest. It's always way above prime. So at the end of the day, they end up really incurring an enormous amount of cost to access equity based on debt, and in an environment that can essentially, when they pass on, leaves very, very little to the heirs of the estate. And they could actually run out before they reach that end of point in time. So that and other factors, and looking at the affordability issue as well, because there's an application to bring this into helping people buy homes for the first time, led me to start creating this concept of how do you apply blockchain into this space. And started looking at debt, mortgages, and saying, you could base it on equity as opposed to just debt, which means you're underwriting the asset. You're not underwriting the person anymore. So we're less concerned about your credit rating. We are not concerned about whether or not you have a job. We're concerned about the asset and what that asset represents in terms of an appreciable asset. So it was all these things that led me to this. And I thought it was a compelling use case for blockchain technology into this space and enabling to do good. I mean, we're very mission driven. We want to do good. We want to help people access their equity debt free, and we want to create a great asset for investors to invest in.
Wow, I love it. This is great. Were there any specific pain point or moment that inspired you to the funding of Vesta Equity?
Oh, we suffer pain all the time. in, in your startup, you experience a lot of pain. When you're innovating, you're essentially trying to sell a new concept, right? And your sources of capital are traditionally angel investors, friends and family. If you can convince friends and family, I've never been a big fan of getting friends and family involved in the business because it gets a little too personal. And then venture capital, and they all have their specific thesis of why they want to invest. Angel investors are a little more gut instinct orientated, a little more personal. It's more about a relationship. The amounts they invest in are smaller, but on the other end of the equation, they tend to be a little more hands-on and want to be a little more actively involved in the decision making, which is a double-edged sword. You've got to be cautious about things like that because you're running the business. The investors aren't running the business. And then you have venture capital firms, which are a little more structured. They have their investment thesis, tend to be more rigid, a little less transparent, far more opaque in their decision making. So you end up very often in times where you're frustrated, you don't understand why they don't want to invest, or they're not clear why they don't want to invest. So those pain points can be pretty significant because cash drives the business. Investment drives the business. You can't build a business without cash. And in late 2022 or early 2022, I think of that. That's the day. Yeah, Silicon Valley Bank. And this was a huge pain point for us. Silicon Valley Bank
Yeah, exploded.
basically went kaboom. It wasn't a justified kaboom because at the end of the day, they were not insolvent. They were just having a cash flow problem. And unfortunately, panic took hold, and the whole venture capital market just went into a tailspin as a result of that. And we had some venture capital lined up, and they all pulled out because they had limited partners that were pulling out of their funds and putting everything on hold. So that was one massive pain point for us that required us to scale back the business. We had to bootstrap again. And in our world, bootstrapping means you just cut expenses to the bone. You stop taking salaries and you really start refocusing on refinancing the business. So that was one big major pain point. But out of suffering comes great ideas, great innovation.
Yeah.
And I ended up getting new people into the business that added new energy, new ideas into the business. And as a result, we emerged out of it stronger. And it's the journey, right? And I always liken it to I do a lot of ultra marathons, and I do a lot of obstacle course races, and there's a lot of pain on the path. When you're running an ultra marathon and you're saying to yourself, why the hell am I doing this? Or when you're doing an obstacle course race and you've just run up half a kilometer up a hill, and at the top of the hill is an obstacle that you've got to overcome, and that sometimes the obstacle's a 9-foot wall that you got to get over. So I liken it to that. It's a journey full of thrilling moments, pain, and then exuberance. You come over an obstacle and you feel fantastic. You have a meeting with a VC and it goes really well and you feel incredible. Then you get a VC who ghosts you and you feel like crap. Because you're like, why are they ghosting us? We have a great concept here because you really believe in it, right?
Yeah.
So yeah, that's the type of pain you experience. And then there's people pain too. You get disappointed through partnerships. You get disappointed, sometimes people join the company and it doesn't work out the way you'd hoped. So you have those people disappointments too. And that can be painful as well.
That's wonderful.
Thanks.
Awesome. Um, let's dig into Vesta Equity and for our listeners, for someone hearing about Vesta for the first time, how would you explain what you do and why it matters? You
Okay.
mentioned it a little bit, but
Yeah.
if you can.
So I'll address it from two perspectives. I'll address it potentially from three perspectives. So if you're a homeowner and you fall into a category where you don't want more debt because of your age, potentially, maybe you're 55 to 60 and you want to age in place, you want to stay in your home, but your pension fund, your savings won't quite meet your annual expenses in retirement. This is a solution for you because oftentimes, and the data definitely demonstrates this right now in the United States, that demographic has about $14 trillion in home equity. And the vast majority of North American residents have their wealth in their home. This platform would enable you to tap into that equity and be able to bridge the missing annual annual expense requirements that you might have. It enables you to do it in a seamless, transparent way, and it allows you to take out what you want to take out. And you don't get burdened with monthly interest payments, because with us, there is no interest payment because it's not debt. It's an equity purchase. And we are buying into your home to have future appreciation on that asset. And by no means do we get any rights to the home. You retain all the rights to your home. You still have to pay your taxes and you still have to pay your home insurance. No one's going to come knocking on your door and say, hey, I own 20% of your home. I want to stay here for the weekend. None of that exists. You own
Hope
your
not.
home. It's still your home. We're simply a silent partner in your home. And we're hoping that home appreciates over time. And it enables you to access that equity. You could be an entrepreneur. Entrepreneurs in the United States can't produce W-2s. So it makes it very difficult for them to actually go out and get a loan, because you can't produce something that demonstrates you have regular income because you're an entrepreneur. We've seen the economic shifts right now, and this is everywhere, where more and more people are becoming contract workers. They're starting their own small businesses. There's 33 million small to medium-sized businesses in the United States. That's a significant number of businesses, and these people are going to need to be able to access the equity in their home. Another example is indebtedness. We all know debt has become a serious problem. And if you're a homeowner that has got a lot of high interest credit card debt, at some point, you're going to need to rebalance that balance sheet. You're going to need to fix it. There's too much debt, and you've got to get it off your balance sheet, your personal balance sheet. So this is a way for you to do it. You have equity in your home. You tap into that equity, debt-free, and then you can pay off that high interest debt. So that's the benefit for homeowners. Investors get to invest in a stable asset. This is an asset class that traditionally is rock solid. It doesn't depreciate in value. We've had obviously ebbs and flows, but if you look at it over the long term, real estate appreciates in value, and there's a lot of common sense behind that. It's not an infinite asset. It's finite. Land is finite. It's a scarce resource when you look at it. Residential homes are scarce from the perspective that they're not being built as much as they were in the past. And there's lots of economic reasons behind that, and environmental reasons behind that as well. So it's a scarce resource that will appreciate in value. And it allows investors to buy into that asset, because otherwise they have no way of accessing it. You can't go around a neighborhood and say, I really like your home. Can I buy 25% of it? It's not a feasible concept. Our platform enables investors to invest in those assets at scale with the certainty of the data that we're bringing on board, because all the underwriting data we bring on board for that asset is brought on chain. And by bringing it on chain, it becomes an immutable data record and provides that investor the certainty that the house value is this, the title is clean, et cetera, et cetera. And by doing that, we're giving them that confidence and that source of truth. And then, of course, we roll all these, what we refer to as home equity investments, into pools, and then investors invest in that from that perspective.
That's very interesting. It's for you're targeting the American market, Canadian market also? Or?
Focused on the US market first.
US market.
And the reason we did that is that we wanted to tackle a more complex regulatory environment first. Often Canada follows the US in a lot of these elements. So we wanted to tackle a more complex regulatory environment. And the reality is the market is significantly larger. You just look at the state of California, and economically, the state of California far surpasses Canada from that perspective. So we really wanted to focus on that market first. And the real estate market in Canada is very robust. In the US is very robust and diversified. And that was also something that was extremely important to us. Canada's real estate market's a little more focused on major metropolitan areas, where the economics driving a lot of the underlying appreciation are not necessarily being driven by economic growth. They're being driven by immigrant input into the country, which is artificially driving up the prices. And that creates a bubble. So Canada left us a little concerned about where that market's going to go. And I think we're starting to see in Canada a bit of a crisis in the condo market. And I think there's going to be a bubble there. And I think real estate prices in Canada are going to go through some pain in the next while. So it's going to be buying opportunity if prices go down. And we'll be prepared to move into Canada when we're ready. We do view this as a global opportunity and a global ecosystem. I would love to see people in Australia being able to invest in assets in North America, Europeans being able to invest in assets in Asia, because I think that's where this is going to go. It's going to become a global undertaking and a global home equity market.
Very fair. And what's broken in the traditional home equity model, and how Vesta solving that?
Well, the traditional home equity model is if you need to access equity in your home, you go to the bank and go further into debt or restart debt. That's a bizarre concept. And is it broken? Well, maybe not broken is probably not the right word to use for it, but it's odd that if I own something, like if I had $100 in my wallet and to use it, I had to go borrow against it. Everyone would say that's crazy, right? Makes no sense. So that is a underlying problem that needs to get addressed. If you look at the economy in general, if you look at a company's always had an ability to finance itself through equity or debt. That option's never been available to homeowners. And the idea of selling your home because you need to access $100,000, that's a huge sort of disruption in your life when you start having to move, find a new home, just to access $100,000 or $200,000, and the house is worth maybe $2 million. So those things are not broken, but definitely not well aligned to the needs of consumers. If you start getting into sort of the nuts and bolts of what's broken in the underlying sort of infrastructure and ecosystem, titling is still a bit of a disaster. It's still analog based in some areas. So titling needs to all go digital. So things like that are broken. Insurance in the US is becoming broken. And it's becoming broken because insurance companies are denying insurance to people because they live in what the insurance companies deemed high risk zones. And I think government's going to have to step in and say, you can't do that. And you can't charge just absolutely insane premiums because they're in a zone that you deem high risk. There were a lot of people in the most recent fires in Los Angeles that were not insured because their insurance had been canceled and they couldn't get insured. They had no mortgages, so it wasn't an issue from a mortgage perspective and a bank's perspective. But they couldn't get insurance. That's broken. That makes no sense. So things like that have got to get resolved because you need to have those elements in a digital infrastructure or an analog infrastructure. Those things need to get fixed. They need to get properly addressed and fixed fast because that causes underlying issues within sort of the trust mechanisms that are built in. People need to have insurance. They need to know they can get insurance so they can own a home because accidents happen. So those are the types of things that are broken. On the investor side, things that haven't worked for investors, they haven't been able to invest in this asset class. There have been vehicles out there like REITs they can invest in. There have been vehicles like mortgage-backed securities they can invest in. But we saw what happened with mortgage-backed securities in 2008. That caused a financial crisis because there weren't good mechanisms in place. And I think if you want to look at, what has been lacking in the TradFi space is transparency. One of the reasons why a lot of the problems happened with mortgage-backed securities in the financial crisis is because no one knew what those loans were. There was no transparency into it at all. If those loans had been originated and put on chain, you would have been able to go in and see exactly all the details of that particular loan. You would have been able to do a search on all the details of those loans. You'd know that all that data is on chain and is immutable and hasn't been changed. You would have had more certainty. You probably wouldn't have had the financial crisis you ended up having because someone would have gone, whoa, 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 whoa. Why does this person who's earning $100,000 a year own 10 homes? They can't make the payments. Half of them aren't rented. So
Yeah.
that is, what's probably underlying a lot of stuff in financial services is the lack of transparency. And blockchain changes that. It creates transparency and it creates certainty when a transaction happens. So I think that if you look at the broader context, blockchain is bringing that into the fold, and that's going to definitely change things. And they make things more accessible to everyone in general, which is another aspect. There are parts of the financial system that are not exactly fair. People can't get into investments because they're not this or they're not that, or there's insider information or insider knowledge about this, that, and the other. So those are the type of things I think that blockchain is going to change.
You just answer my following questions
Oh,
exactly. No, it's
yeah,
wonderful. Trust and transparency. How do you ensure trust and transparency? Thanks to blockchain,
yeah,
and yeah, that makes a lot of sense.
yeah.
Um, Thank you for this insight. It's
It's
great to
important.
learn.
Yeah,
Yeah,
it's important because good economies function on trust, and wired into blockchain is trust. The data is there. I mean, they call it trust. It's at the end of the day, the information is there, so you can trust the information without having to know the parties involved. And that's what's important. It takes the human element out of it. You don't have to hear it from Joe that this is the fact. You actually can see it, and it's there, and it's been established as data, and it's now on chain, and it's immutable. No one can change it.
love it.
Yeah.
Um, let's talk about market or trends. Let's zoom out a bit. You're operating at the intersection of PropTech, blockchain, and fintech.
Mhm.
Um, what are some of the macro trends that you're tracking right now that could shape PropTech over the next year or two?
I think a big trend that's going to impact prop tech is artificial intelligence. And it's something that we've weaved into our own ecosystem. And the deployment of AI and PropTech. PropTech's a pretty broad concept from construction all the way to what
Yeah,
we're doing, environmental issues in and around properties and commercial, residential, and whatnot. But I think AI is going to have a significant impact in that regard from a technology perspective. From an economic perspective, new materials that are going to impact construction is a trend that we look at, because is it going to allow homes to be built faster? Is that going to help solve affordability? Because we do look at affordability as an opportunity down the road. It's not something that we're addressing right now, but it's a trend that's going to have to get addressed, or a problem that's going to have to get addressed. Are new materials, new building technologies, and whatnot, are they going to help people buy homes? And then how are they going to finance those homes? Are homes going to become more modular? Are homes or single residential family homes going to disappear? Are we going to become much more oriented towards building up for environmental reasons? Although one can argue that
multifamily.
a 50 tower building is not environmentally friendly. It depends, I guess, on your perception of it. So the environmental issues are something that we're always watching at from a trend perspective, because if cities become more rigid about residential expansion and start saying you can't build in that area, that's going to drive up the existing value of residential homes, because no more of them are going to get built. So it's going to drive their value up because demand's still going to be there and supply is not going to increase. How will our model work with a build up environment, in a condo type situation where they're building up as opposed to building single family residential homes? And essentially, those are the things that we're looking at. The trends like AI as a trend was something that 5 years ago a lot of people weren't paying attention to, and its impact has been exponential in the last year. I have just seen more
Yeah,
businesses
yeah.
launched on AI, more automation than I could possibly have ever imagined in such a short period of time. Whole customer service functionalities, um, marketing, underwriting processes that we are deploying can all be automated using AI. And then you start looking at AI into the integration into smart contracts. Then it really becomes a smart contract, when you start deploying AI into that equation. So again, there are a lot of micro trends, but I think the biggest macro trend right now is going to impact PropTech, impact fintech, impact blockchain is going to be artificial intelligence.
Yeah, very good answer. What challenges do you see when it comes to adoption, uh, both as consumer level and institution level as well, of blockchain, of course?
I think with consumers, you've got to keep things simple and straightforward. You can't. The only way blockchain, AI, and technologies like that are going to work for the benefit of consumers is if they're seamlessly integrated into the solution. You can't start talking to a consumer about the algorithmic process of a blockchain transaction.
Yeah, that's
their lives are too
obviously.
busy. They don't care, right? They don't care how their 5G phone works. They just know it works.
Yeah.
So the challenge is convincing someone that it's going to work, it's going to be successful for them if they use it, and they're going to have no bumps and hurdles, and it's secure and whatnot. So I mean, that's an inherent challenge, getting their ear to get them to listen to that. On an institutional side, what you've ended up happening specifically in sort of the deployment of blockchain technology is we've had too many, in my opinion, though people argue with me about this, too many L1s, too many L2s launching. So too many blockchain platforms launching. A lot of them are just crap. And you can't, it would be like having 20 million operating systems. I mean, can you imagine if we had a choice of 15 to 20, 30, 60 operating systems on your computer, and a lot of them were not compatible? And there's a lot of companies out there trying to bridge the interoperability issue. But at some point in time, we've got to narrow it down. I keep saying this, but every day I keep hearing about a new L1 or L2 being launched. So from an institutional perspective, there's got to be some sort of streamlining of that. We've got to narrow this down to, a couple of top tier blockchain solutions. I'll probably get a lot of pushback on that, and people are going to say, well, that's the whole point of it. It's got to be decentralized and let everyone be interoperable. Maybe that is it. That is what's going to happen. But I see that as a challenge right now, because you don't want to end up in a situation where you have all these silos and no ability to go cross-chain seamlessly and easily. There's people out there who claim you can right now, but I still think it's wrought with problems. So that's an institutional issue that's got to get resolved. I think the regulatory issue needs to be clarified, and that is the institutions working together to get governments to work in partnership with the industry to get some clarification on blockchain, crypto use cases, privacy issues, and whatnot. So I think that is something that is a challenge that's got to be addressed and addressed sooner than later. And there's got to be an environment that governments are not there to tell people what to do. They're there to work in partnership with the industries to create a better environment and foster innovation. We don't want government stymieing innovation. And there was a risk of that happening in the US with the former SEC chairman, Gensler. He was stymieing innovation. You don't want to stymie innovation, but at the same time, you don't want consumers to be taken advantage of either. So there's got to be some intelligent balance in that regard. So that's a challenge that's got to get addressed.
Love it. Talking about challenges, let's get real for a second. Every founder faces friction, especially when building something that's ahead of the curve.
Mm-hmm.
What have been some of the biggest challenges you have faced when building and scaling Vesta Equity?
Cynicism. People don't believe that you can do it. They don't believe in the technology. They go in with ill-informed perceptions. Like I'd mentioned earlier, that everyone, and it still happens, everyone thinks blockchain's crypto. And the minute they hear crypto, they think, oh, wild speculation. They don't bother informing themselves of why is Bitcoin at the value it's at? Why is Ethereum at the value it's at? There's a utility to these cryptocurrencies. They provide a function. You can argue that it's value too high, but there's an underlying utility to it. People don't inform themselves. They just think it's a Ponzi scheme. And there are Ponzi schemes. Don't get me wrong, but there's this inability of people to educate themselves, look at things like that. That is just an inherent thing that you need to do is inform yourself, because don't render an opinion on something, and it is all just an opinion when it's ill informed. Look at the facts, and that is a big challenge when you're launching a new business, a new concept, because right away people are cynical. They don't believe in it. They think that you come up with some witch's brew and you're selling them some crazy idea, and you've got to convince them with the facts, and hopefully they listen. But that is just one big challenge. I don't understand why people come to a pitch or a presentation without looking at your deck, and then also informing yourself of the space that particular company is in. And what are the pros and cons of the technology? Because every technology's got pros and cons. Does this use case make sense? To me, that is a big challenge that we face on a regular basis.
Yeah, definitely. Is there then you've been talking about pain point as education, customer education. I mean, obviously, it's
Yeah,
need to be need to be aware of things.
yeah.
Any other pain point like regulation or, or
Well, I
partnerships
mean,
maybe inside?
the problem with regulation, it's the lack of clarity right now of regulation. Um, you look at the fear a lot of people had with tokens, and it's still a problem, right? What is a token? When it represents an asset, is it a security? Does it behave like a security? If you tokenize gold, is that suddenly a security? Because gold's not a security, right? Is an asset like real estate a security when you tokenize it? It's technically not, because I mean, if you look at a security, it's an investment in a business, an operating entity, where you have people running that entity. You have market factors that can impact the business results. You've got competitors. It doesn't behave like a commodity, obviously. So that lack of clarity causes problems. People get concerned, is this a security? And it's technically not. But do you have to behave like a security? Do you have to undertake the necessary steps to treat it like a security? So those are things that just need to be clarified. To me, the acts that were put into place to define what securities are need to be revived to reflect the new reality. I mean, some of those laws were enacted in the 1930s and earlier, and they need to be updated to reflect the new reality and the new digital reality that has evolved. Because you can't say a digital piece of artwork is a security. It's just a digital piece of artwork, even if it comes with certain inherent rights, like potential revenue off that, if it's sold multiple times, and other revenue that could be derived off a digital piece of art. But the fact is that those things need to be clarified. There needs to be some rules defined to say that this is a security because of this. This is not a security, or maybe it's a type of security. But those things all need to be clarified, because regulatory environment, if it remains unclear, you are actually hurting consumers, because someone will take advantage of things. And that clarity defines things. It says, this is a playing field. These are the rules. This is how we play the game. And if it's played well, there'll be people coming out with good outcomes. And that needs to be, definitely need to undertake that process. So.
Yeah, I mean, definitely. If regulation is not clear, then how can you educate customer correctly?
Yeah.
um, it's it's a never-ending story. Then
Yeah, and it'll spiral out of control.
yeah. Um, what what lesson have you learned the hard way that other prop tech funder might benefit from?
Oh, God, that's a good question. Um,
maybe not.
no, I mean, it's really important to never stop fundraising. And by that I mean, don't think because you've closed a round that the next round is going to be easier. You're as a CEO of the company, as your CXO team, you guys should never stop fundraising. You're constantly fundraising until the day you IPO, and even after you IPO, sometimes if you're still involved in the company or you sell the business, you're constantly fundraising. Don't stop. You got to be hunting all the time for more money, and you may not take it, but you've established a relationship and you let them know your Series A or Series B is coming up. So never stop hunting. Find good people. That is really really important. If you don't find good people, you're going to fail. Be prepared to pivot, but don't pivot based on inaccurate information. Get your ducks lined up. Make sure you're making a sound decision, but don't be afraid to pivot. This is a time in your business where you can be extremely agile, and we've pivoted, and to the benefit of the business. So don't be afraid to pivot. It can be painful. It's a lot of work, but don't be afraid to pivot, and keep your ears open. Listen. I find entrepreneurs tend to get so immersed in their idea and so immersed in what they're doing, they don't tend to listen anymore. They fall in love with their idea. And it's great to love your idea because you got to bring passion to the equation, but don't fall in love with it to the point where you stop listening to people. People are there, got different opinions and different viewpoints that can actually enrich you as an individual and as a business. And their idea may not be exactly, or their comments may not exactly be fitting for what you're doing, but they could help you think about it and then reinterpret what they're saying and then apply it to your business. So my advice is don't fall in love with your business to the point, or the idea to the point where you stop listening to people and start keeping your eyes wide open as to what other options there could be and other approaches there could be.
I love it. That's recorded very deeply. Great advice. No,
Yeah.
definitely. Adapt to changes, pivot, raising money is nonstop. No,
Yeah.
definitely. That's a very good point. And listening, definitely. I mean, if you
Yeah.
have a team, you need to learn to get feedback, and positive feedback, negative
Yeah.
feedback, and uh, and 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 play with this, and
Yeah.
adapt, change, pivot. Yeah.
And the other thing I would say too, which often gets overlooked, is go talk to your clients. Like as the CEO and CXO team, you need to go out there and talk to people. Talk to I've gone out and I've had beers with some of the homeowners that joined our platform. Go out and talk to them. Find out why they're doing this. They're human beings at the end of the day. Talk to them, get to know them. I think a CEO or CXO team that sits in a room coding all day and not actually talking to someone is a mistake. You
Yeah.
can build a better product by talking to people. And that is really, really important. And we've become this, I wouldn't say society, but we've created this sort of mindset that's build, 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 code, 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 code. But you don't talk to
Yeah.
someone. How do you know what your coding is going to work for them? Right. So get out there and talk to people. Build a better product by interacting and talking to your customers.
Listen and talk.
Yeah. Yeah. To which you can, if you look at
I
it,
open your eyes.
when you look at it, there's a risk when deploying AI that you stop talking to people, right? Because the AI is doing it. The AI is making. You
Yeah.
gotta be really careful with stuff like that, because that can remove that part of the process out of the equation. And yeah, you've got a great coded platform, and AI did a great job, but no user wants to use it because it's meaningless.
Yeah.
Yeah.
I love it. Let's look forward now.
Yeah.
And what's your vision for Vesta Equity in 2025 and beyond?
So in 2025 and beyond, so we will have our fully evolved platform built out on the Provenance blockchain, which is something that's critically important to the business. We will be originating our first home equity investments and those first on chain in 2025. And then beyond that, we want to build out our client base in North America, first focused in the US market, and then expand globally, which means we have to build out that homeowner database and that investor database of users buying into the asset. As we develop this technology and take it further, we want to integrate it more into what you can refer to as the DeFi ecosystem. So I would love a homeowner to say to the homeowner, hey, you can sell equity in your home. You can take the payment in YLDS, which is Provenance's stablecoin, and earn yield off of it, which is a pretty novel concept for a homeowner because they sit on their home and yeah, it's appreciating in value, but they get no cash out of it, right? They can actually create cash out of that just by holding YLDS. So it's sort of like taking your equity, putting it into a bank account and earning interest off of it. That's a novel concept. For the more advanced homeowner, they could take it and stake it, and even it's a little riskier, but earn more yield off of it. That's a really compelling concept because suddenly you're your own bank almost, right? You're making a decision on your home equity, you're positioning it the way you want to position it and be able to leverage the way you want to leverage it. On the flip side, we're creating a great asset for the investors to invest in, and they can also leverage that asset in different ways. They can go from low risk, they can just hold it, or they can start getting into riskier endeavors and start getting greater returns. And that really is what we call the home equity economy. And that's our vision, is to build that economy and enable people to be able to leverage their greatest asset, their source of wealth, which is their home for many people, and allow a robust ecosystem of investors to buy into it, participate in it too. And there's a lot of investors out there, from insurance companies to pension funds, that need solid investments to provide good returns without the risk of stock purchase, or without the risk of a cryptocurrency, without the risk of investing in an early stage mining company. And by that, I mean like raw resource mining, which is high risk, or investing in in a high risk hedge fund or something like that. Those are the things that we see happening in the next, from present day to the future. When that timeline, how that timeline evolves exactly, I'm not sure, but that's our vision for the company and where we want to take it. There's a huge opportunity, and take it global as well. We want to help people in Asia. We want to help people in Europe, North America, Central America, South America, and tap into this home equity economy globally.
I love it. This is great. And what would you say to investor or funder still on the sideline of blockchain and real estate?
I tell them to educate themselves.
Good, talk to me.
It's going to happen. I mean, if you look at any of the data or any of the reports out there, it's going to happen. It is a force moving forward that is unstoppable. It does not make economic sense to keep an asset class analog, which is essentially what you're doing. If you say blockchain is not the solution, I say, okay, well, what's the solution? A paper ledger? It's going to go digital, and the best digital platform is blockchain, and it's an inevitability. So if you're an investor that doesn't want to invest in it, that's fine. You sit on the sidelines and you watch it grow exponentially, and that's your choice. But this is going to happen. You need to educate yourself. You need to really look at the fundamentals behind it. And there's great use cases of where blockchain technology has been deployed. And just if you look at just the present day data of the efficiencies that kick in when you use it, they're massively significant. The transactional speed, the cost of transactional speed goes way up, cost of transactions go way down. Certainty of decision making goes way up because there's that transparency. Yeah. So if you don't inform yourself and don't see the, being blunt, the writing on the wall, well, you're going to miss out. There's a significant opportunity afoot right now. And it's made more so too by the fact that you're getting a compelling intersection of blockchain technology, um, highly accessible data, and AI converging at one point. That's a pretty significant. You don't see that happen often. If you look back to the history of technological development and things intersecting, you don't get that very often. This is a pretty compelling intersection because they all work and integrate really well to produce a phenomenal outcome. And that is just once in a lifetime, or maybe once in a generation, or even more, once in a multi-generation opportunity. And it's going to change a lot of aspects of the economy, and it's going to change. I think wealth generation in general. It's going to definitely evolve it and change it, and I hope make wealth generation more accessible to more people. I mean, technically, you could have a phone and buy into home equity, and you could be anywhere in the world. And I think that is a phenomenal concept. And you could buy. I mean, this is going really down the road, but you could essentially buy one token's worth of an asset, and suddenly you're in the wealth building game. So that was something that would never have been accessible to a retail investor, and I do see that happening down the road, where you could buy a stable coin as an example. I mean, you could go and buy a stable coin and earn yield right now, right? And you're not using a bank, so you're earning it technically interest, and you haven't stepped into a bank. You've done it all on your phone. That's pretty compelling. And that creates an incredible opportunity for people to generate wealth and new ways of generating wealth. And I think when you democratize wealth creation, it's just going to explode everything else. It's just going to make the economy much more vibrant.
I really love it, and I think there's a whole conversation we could have on another podcast about AI and blockchain together,
Yeah.
And I mean, we because as you say, AI is there for a couple of years,
Yeah.
and even maybe many years, but people were not talking about AI; they were talking about IoT or any other things, and
Yeah.
but that was AI, and it's just the premises of what's going to happen.
Yeah.
And blockchain is the same thing. Blockchain is there for the past 10 years, or 15 years, and it's just the beginning. we
It
we
is.
there's so many things happening, and together, uh, that's an interesting conversation. That would be an interesting conversation.
It would be a fascinating conversation because AI relies on data, right? Data can
Yeah,
be fudged and changed, and if it's on chain, it can't be. So there's a good marriage there because you want AI to be working off real data. You know, you don't want it to be working off something someone's either altered or changed. You want
no,
them to want it to be working off real data, and if it's on chain and that data is real, it
yeah,
cannot be altered, and that makes much more of a secure back end for that AI to be making decisions off that data. So that unto itself is very interesting. So
makes so much sense. Unbelievable. Um, all right, let's uh, let's wrap this up, and I have a few quick questions, and
yeah,
feel free to answer with one or two sentences. One book or resource you recommend to early funders?
to early funders in
Yeah,
this
to
space from a blockchain perspective, I can't remember the name
yeah,
of the
why
book.
not?
One of the books. One of the books.
Prop tech in general, real estate
Well,
maybe. Yeah.
there are no real estate books come to mind. There's so many scammy books out there for real estate. But
Forget it.
from prop tech, I mean, from a just a general perspective, Anthony Welfare. I can't remember the name of the book, and I'm bad with names. But Anthony Welfare, who's an author, wrote a book, and it was a
Cool.
book about all the use cases. One of the first books I read about blockchain because it was about use cases. And I can't remember the name of it. I'll get it for you and I'll send it
We'll,
to you after. But it was a
we'll find
great
it out.
book because it was use cases, and he had so many outstanding use cases. In fact, one of the use cases he had in the book was about olive oil producers, using blockchain to provide provenance, basically on the origination of the olive oil, because there's scams and fraud and olive oil, honey, and all these commodities that we buy. And using blockchain could actually, by putting it on chain, you can actually prove that that was a real olive oil with 100% real ingredients. So it was a fascinating book because it got me thinking about all the use cases. And he had some phenomenal use cases in there. I
Very
also think
interesting.
another great series of books written on blockchain was written by Don Tapscott and his son. That series of books were phenomenal. They covered everything from the early originations of blockchain right through to fintech and how it can be applied into financial services. A great series of books because they're written so that they're not overly technical, so that someone can read them and really immerse themselves into how blockchain can be properly used in various areas. So their series of books were absolutely phenomenal. It happened to be two Canadian guys too.
More
And
interesting.
it's
Very cool.
very, 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 very good series of books.
Fantastic.
Otherwise, I think, the technology is evolving so quickly. And if you're not technically orientated, you don't necessarily want to read a book about the technical side of blockchain. Is really immerse yourself into webinars, podcasts, articles, blogs, and try and make sure you're not getting caught up in the hypey, trendy silliness that sometimes can happen in this space. Really, the solid use cases. I'm not pushing provenance, but provenance is a great resource. ProvLabs, which is the L1 we're using, they're without question, in my opinion, the leading L1 in financial services, in the financial services space, in the tokenization and digitization of real world assets. Phenomenal resources on their website that you can go read. So if you're in financial services, read everything on their website, learn about their technology and how they're deploying it. Phenomenal resource. And if you can, go to some of the events. They're expensive, but Consensus, Bitcoin, and all the others, they're sometimes good to attend if you really want to immerse yourself and get to know the industry and the people in it. They're very, very worthwhile attending to get a sense of the ecosystem that's developing.
Great advice. One tech trend you're excited about that's not getting enough attention?
It's got nothing to do with blockchain. I'm fascinated by 3D printing. And the reason, and I'm fascinated in material science. I mean, they're not related to blockchain at all, but I'm
Okay.
fascinated by that intersection of 3D printing and advanced materials. Because I think there's huge opportunities there. I mean, they've got 3D printers for homes now, where you can go in and 3D
I
print a home. I don't know how good they
check
are.
check one of our podcasts. I interviewed a creator of
Yeah,
3D printing. It's gonna be fun.
it's fascinating because
Yeah, it
it's
is
things
unbelievable.
you can do from are amazing. People don't realize that airplane parts now are 3D printed. So you're flying in a plane sometimes with 3D printed parts. So I think that whole space is fascinating. It's got nothing to do with blockchain. I'm a bit of a geek and I love stuff like that. So
But talking about this, Justin D'Angelo is the name of the CEO of Printera,
yeah,
which is one of our podcasts.
yeah,
I mean, he's against the 3D printing at home. It's not working. It's you need a lot of technique. You need
yeah,
I mean, the material is very. I mean, it's hard to manage,
yeah,
and many other things. But the
yeah.
interview is interesting as well.
I'll watch that.
Um,
I'll watch that because that's fascinating.
one um, uh, the biggest misconception about tokenizing real estate.
The biggest misconception? Um, it's a good question. Though I guess you could look at it from two perspectives: the homeowner misconceptions and then the investor misconceptions. So from a homeowner perspective, I think the misconception would be that they are giving up rights to their home by selling tokens from their home.
Yeah.
Um, that often is something that you need to address. Now, the way we approach it is we really don't get into the whole idea that that HEI contract is tokenized, right? The homeowner doesn't really need to know about that. And then I guess the other misconception, and this would fall into both sides of the equation, is that somehow tokenization is equated to cryptocurrency and volatility. If you were to take a home and tokenize it, you would pin it to a stablecoin, right? You wouldn't pin it to Bitcoin or Ethereum, which would create volatility. In fact, when you think about it, if I were a homeowner and I'm selling my home, and I accepted to take the purchase in ETH, it could go up the next day or it could crash the next day. So people need to understand that if you were to tokenize an asset like a home, it would be tied to a stable coin. So it's not going to have that volatility of a cryptocurrency. So I think that is definitely an area of misconception. I think from an investor perspective, their misconceptions again are driven by the same misinformation about what is a token. Token does not equal cryptocurrency. The asset is tokenized. So if you take a home and you fractionalize it on 10,000 basis points, and you say that home, as an example, is worth $100,000, tokenize it on 10,000 basis point, the token equals X, right? And that is backed up by a US stablecoin or USDC or something like that. So it's not going to have that volatility. It's worth that, and it's worth that. And that's probably the biggest misconception about tokenization in real estate.
Perfect. Good answer. One thing you wish you knew earlier in your journey?
That's a good question. One thing I wish I knew earlier, that you're going to have a lot of turnover with people.
Yeah.
The team you start with is not necessarily the team you end with.
Changes.
Yeah. And, I knew it was going to be tough. I didn't know how tough it was going to be. And I'm used to tough stuff, so I didn't know how tough it was going to be. It is hard. And you got to have you have a lot of nights where you wake up going, why am I doing this? And it's helped me to read the journeys of others and other entrepreneurs. I mean, I was reading about the founder of Airbnb, and he says he woke up sometimes in the middle of the night going, what am I doing? I'm 50, and this is going back a number of years, so there's a lot of debt, like $50,000 in credit card debt. I have no job. I'm trying to get this business off the ground, and the night sweats he says he woke up with and the worry he woke up with is pretty extreme, and I get it.
Yeah,
it's hard.
We go.
It's very, very hard.
Michael, that was a brilliant conversation, very deep.
I enjoyed it.
Thank you so much for sharing your insight, experience, vision. And if people want to learn more about Vesta Equity or connect with you, what's the best place for them
to go to our website. Go to our website, www.vestaequity.net. And there you can also find our social media connections and follow us on social media. That's definitely the best and easiest spot to get a quick introduction to Vesta Equity, either if you're a homeowner, an investor, or any partner that would want to partner with us. That's the best place to go to.
Fantastic. Thanks again. Thanks again for being here. It was great.
Enjoyed it.
I know this episode, I enjoyed it very much. I know this episode is going to resonate with founders, investors, innovators across the PropTech space. And we have to take, we have to book another one for blockchain and AI together, maybe, and maybe a panel with somebody else.
I would actually, there's someone at the CTO at Prop Labs would be a great person to bring into that conversation. Absolutely brilliant individual. He'd be a phenomenal person to bring into that conversation.
That's a deal. Thank you.
Perfect.
Okay, wonderful. Michael, we keep in touch. Thank you very much. Thank you for listening, everybody. Bye-bye. Take care.